Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vanimoti, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you. But markets seem to be having a very good afternoon. I think after the break, they've become more sluggish. And we're seeing a bit of a fall, slight bit of a recovery, but yes, off the day's point.
Yes, actually sharply off the day's highest point. When you look at the benchmark indices, now it's up 22,600 mark as well, Vinny. And the fall is only like accelerated over the last 1.5 hours or so, because we were holding on to those levels above 22,600. We were just seeing falls above 4% to 0.3% or so. Now we've seen a sharper decline coming in, almost 9% downtick coming in for the benchmark indices. Over the last 15 minutes, there are a couple of stocks that have seen momentum. One is Ashiana, that's fallen about 7-10% last 15 minutes. You have IOC, SW Steel, Dr. Reddy's. They've actually seen a decline. In fact, oil and gas players primarily, Vinny, have actually seen a decline over the last 15 minutes. Be it IOC, BPCL, HPCL, all of them are seeing a decline in the last 15 minutes. Add to that list, Reliance Industries also is actually taking a mild bit of downtick over the last 15 minutes. So that also could be aiding the fall in the benchmarks.
Absolutely. And other than that, in terms of top contributors that have seen a fall, we do have HDFC Bank, Infosys, Sun Pharma, ICICI Bank, which was performing in the last week and last couple of trading sessions. That's also down and out in terms of top drags that have come in for the markets. But on that note, let's get started with all the stocks that have been buzzing in trade on the back of news flows and technicals. And on the technical, we're joined by Amar Singh, while from the research team, we have Ashish as well as Snehi joining with us. A very good afternoon to all three of you all. And let me start then with the first stock that we should keep an eye out on, or a couple of stocks that are in focus today. That is Syngene, Laurus Labs, as well as Newland Labs, which we're keeping an eye out on. Now, we have a brokerage note that's coming from Goldman Sachs, where they have indicated coverage on the CDMO CRO business. So the players that come in focus are Syngene, Laurus, as well as Newland Labs. Now, Laurus, they're initiating coverage with sell rating. They believe the back-end earning inflation is at an odd with front-end street expectation. So yes, that's something that we're a bit worried about, and that is why Laurus is a bit subdued in trade, down 3%. Target price they've given for Laurus is 350, currently trading at 444. Moving on to the other two stocks, that is Syngene as well as Newland Labs. Both of them are buzzing away in trade. Now for Syngene, they're saying, obviously for the CDMO business, they believe there are 3 C's that work out: capacity, capability, as well as customers that will catalyze the growth, lead to a better growth for the company. The supply chain diversification pickup is a positive for both these Syngene as well as Newland Lab. And Syngene International has a lot of integrated growth engines. They expect, the target price to come in at 875 for Syngene, while Newland Labs also a target price of 1,100 rupees. So significant upside when you expect it in terms of target price for both these stocks, and that is why seeing a strong move there.
Absolutely. So there you go. Goldman Sachs initiation definitely have working for these counters, except for Laurus Labs is working on the negative side. It's a negative call. Well, let's talk about CDSL. And how is this looking on the charts to you? Because this is the only player that is listed in that particular domain.
I would say that CDSL had been consolidating for quite many weeks. If you look at from almost first week of December, the stock was consolidating between the 1800 and then it had moved higher towards 2000 levels, and then again it corrected all the way to 1600 levels. So the stock was in a consolidation zone between 1600 and 2000 levels. Now the stock is again breaching the 2000 zone, because that was an important zone of resistance. And also if you look at the stock on a weekly basis, the stock has been making higher highs for the past 4 consecutive weeks, and also reaching a crucial zone of resistance that's around 2050, 2060. Taking that out, the stock has the potential to rally towards the 2150, 22 levels. And also if you look at the stock from a long-term perspective on the quarterly charts, on the monthly charts, the momentum is very strong. However, on the weekly charts, what we did witness was that the stock corrected towards crucial support. So the stock moved into oversold territory and then consolidated. One interesting part for the stock was that on 27th of March, the stock witnessed exceptional high volumes and delivery quantity, both towards the lows of the day, that was around 1675, and so that was significant buying which happened in the stock, and from there the stock took off. So this is one stock one can definitely look at closely.
All right, let's move on then. Let's talk about CreditAccess Grameen, because that particular counter is also moving on a note that's coming from Goldman Sachs, where they've initiated coverage on the counter as well. You saw the stock actually see an uptick of as much as 4.9% on an intraday basis. Goldman Sachs has initiated coverage on CreditAccess Grameen with a buy rating. They've set a target price of 1,788 rupees per share. Well, Goldman Sachs is saying that the company is well poised to capture a share of expanded approximately $136 billion microfinance lending market. They are expecting an AUM growth of about 19% CAGR from FY24 to 28. They are also saying that FY24-26 profit after tax to grow about 21% CAGR, driven by 0.4% CAGR in lending as well. They're saying that Access can narrow unwarranted valuation gap with larger peers over the next 2 years if it continues to deliver with superior operating matrix. They're also saying that CreditAccess Grameen's FY25 price to equity of about 12.4 times is at a 27% discount on an average to an NBFC covered by the firm. So they are pretty gung-ho about this particular counter. In fact, going ahead initially with the buy, setting a spectacular target price, 1,788 rupees per share. So CreditAccess up by 4.5%.
Absolutely. But let's talk about another stock that is buzzing in trade. Yes, markets have fallen with these stocks bridging to hold on to those gains. Metropolis Healthcare. Shesha, you know, this stock is trading. It actually managed to touch a 1-year high, intraday trade high. Look at it. What is the reason for Metropolis Healthcare being in focus?
Operational data for the quarter gone by was very strong and in line with broad markets. The stock is off the highest point, but despite that, sitting with gains of nearly 3% as we speak. Core business revenue grew by about 15% on a year-on-year basis in the fourth quarter. Core revenue growth was driven by volume growth, which stood at about 8% on a year-on-year basis, and RPP growth of about 7%. The management also said that RPP growth was largely led by growth in specialty test segment, premium wellness segment, and the price increase that the management had taken in the fourth quarter. As far as B2C revenues are concerned, that also saw a solid uptick of about 18% on a year-on-year basis, and most importantly, the company repaid all of its balance debt in the fourth quarter, and now it is a debt-free company as on the 31st of March 2024. So several positives. Commentary is quite positive. Operational data is also positive, and the fact that it has become a debt-free company is also positive, and hence the stock is gaining nearly 3% today.
All right, moving on, Amar, let's talk about Quess Corp and how is this one looking on the charts, because today on a day basis, this one is definitely buzzing in trade.
Yeah, I would say that Quess Corp has been on an upside from almost 450 levels. Currently, it's around 600 plus 650. And what we're witnessing in the stock is that the stock was consolidating. So from the 14th of March, the stock went in for consolidation. Towards the end of March, it broke out of that consolidation that was around the 500 psychological mark. And if you go slightly back in time, so towards 9th of February, it had made a high of 580, 582 levels. Those levels have been taken out, and also what we've seen is that there has been a decent volumes on 4th of April and 5th of April, and again today the volumes have been significantly higher. Looking at the long charts, these are the levels to watch out for, because if I look on the quarterly charts, so somewhere I see is that 580 and 620, that's a zone of resistance for the stock. So sustaining of that level, the stock has a potential to rally towards immediate zone of resistance would be around 660 to 670. So the stock has a potential to rally towards those levels. Technically, if you ask me, it's positive on most of the time frames. So this is one stock one can definitely keep a watch on.
Okay, surely positive on most of the time frames. That's interesting, keeping an eye out on Quess Corp. But Purvankara, that's very, very good run up. Last 1 year, 5 months, 6 months, whatever it is. And specifically 5 days, when I'm looking at it, that's also seeing a run up, locked in upper circuit. What's the news flow today for Purvankara to see a run up?
Well, Vinny, like you mentioned, over the last couple of days, we have been seeing some positive news flow coming in for Purvankara that would help understand the move we've been seeing on the stock. But today, particularly, stock is up in upper circuit, 10% higher. Now, Piramal Group's flagship company, Piramal Enterprises, invested over 500 crore rupees in a portfolio of projects of the Purvankara Group. This is a story of the Economic Times that they've reported this morning, and the investment encompasses a range of projects spanning from commercial properties to residential ventures, reflecting a strategic collaboration aimed at bolstering real estate endeavors across multiple regions in India. Now, key projects of this investment include the development of commercial properties spread over 8 lakh square feet along Kanakpura Road, which
bustling locality in Bangalore, known for its rapid urbanization and commercial growth. The investment extends to the development of IVC Villa, which is a blend of villas and apartments in Bengaluru. The company also acquired 4,100 shares in PPL Khondapur Development Private Limited. That has now become a step-down wholly owned subsidiary of the company. Now, a few days ago, we also did see a note coming in from Yes Securities indicating coverage on the stock with a bullish buy rating with a target price of 42 rupees per share. So, over the course of all of these news flows, and especially today's news flow with Piramal investing 500 crores in the company, the stock is away locked in upper circuit, up 10% as we speak.
All right, let's move on then. Amar, let's talk about IRCTC and how is this one looking on the charts to you now?
If you look at IRCTC, this is one stock which actually, if you go back in time, so the stock is still to scale its all-time highs. So from there, the stock corrected all the way and went in for consolidation. But over the past, I would say, few weeks, particularly starting from the second week of December, the stock has started moving up above the 770 because 750, 770, that was a zone of resistance. So that being taken out, the stock rallied towards the highs of 1040 and then again corrected towards 60. Again, the stock has reached that 1040, 1050 levels. So technically, if you ask me, the stock is very strong on the long-term charts, on the monthly charts, on the quarterly charts, and the stock needs to maintain the bullish momentum because if we look at the charts going back in the first week of April, we've seen significant volumes and delivery quantity both happening in the stock. So on the first, second, and 3rd of April, there was significant volumes and delivery quantity. So that shows that there is definitely some interest which is and also the stock had taken out the zone of resistance which was around the cycle 980,000 levels. Currently it's around 1060 odd. This is one stock one can definitely keep a watch on because the stock has reached major zone of resistance. Sustaining above the 1040, 1050 zone is very important. If the stock sustains above the 1040, 1060 zone, the stock could means towards its all-time high. So the stock could rally significantly from your 10% rally. We could see if the stock sustains over the 1050, 1060.
Okay, keeping an eye out on that level. But let's move on, talk about the stock that's in focus, that's scams. Why is this in focus? It's trading with gains of more than 4% at one point of time. As of now, also managing to hold on to around 4% gains. But this is because they have gotten an approval from RBI that the company has been authorized to operate an online payment operate as an online payment aggregator. The central bank had in February 2023 given a company an in-principle authorization now to operate online payment aggregators. Because of that, we're seeing that the stock is buzzing away in trade. It's holding on to gains of almost 3.5% as of now as well.
All right, let's move on then. Coming right back to you, Amar, let's talk about Radico Khaitan. This one had a very good run. If you see over the last 2 years or so, now the stock is approaching the 2,000 rupees per mark level. What's your take coming in on Radico? Do you think that this roaring rally the stock has been witnessing over the last 2 years will now halt?
If you look at Radico Khaitan from a structural perspective and from a long-term perspective, the stock is not showing any signs of a decline in momentum on the long-term charts. Having said that, what we did witness was that the stock in the month of December, it had rallied towards 1885, and from there the stock had corrected towards 1470, 1480 levels. And again, the stock is back towards the 1800 mark. And also on significant volume, because if we go back and see on, I would say 19th of March, the stock had significant volumes and delivery quantity happened. And from there, the stock took off. And today also, the volumes have been decent enough. So the stock has a potential to rally towards upside. And if you look at the first of resistance around 1820 odd levels, if that is taken out, then the stock headed higher towards the 1890, 1900 levels.
All right, moving on, Snehi, let's talk about two counters that have been in news over the last 2 to 3 months continuously, Indus Towers as well as Vodafone Idea. And what's the latest?
Well, Vodafone's 18,000 crore FPO, which is India's biggest FPO, is running on the 18th of April. But we now have an update on the details of this FPO. The floor price has been set at 10 rupees per share. steep discount to the current market price at 12.4 rupees. Now, the price of the offer has also been set at 11 rupees per share. A minimum bid lot of 1,298 equity shares and 8 multiples thereof has been decided for this FPO. Aditya Birla Group is going to infuse 2,075 crore, which will now promoter's stake to 19.8% from 17.5%. The company also expects to raise another 25,000 crore via debt going ahead. So on the back of this news flow, Vodafone is taking some heat in today's trading session, down 4.5% almost as we speak. But Indus Towers slightly with a positive bias, up 0.3%.
All right, moving on then, let's talk about HDFC Group counters. In fact, before I go ahead with talking about this news, the thing is that there have been various news agencies as well as Economic Times that reported that MUFG is likely to buy or discuss buying 1.7 billion stake in HDFC Bank's unit, and that's why all of these counters are in focus. Now you have a statement that is coming, a clarification that is coming from Mr. UFG Financial Group, which is MUFG Group. They say that some media has reported that their bank's strategic investment in India, but they're saying that it is not made public from the company or the bank side. What reports were suggesting that they were going to look or discuss to buy a stake in HDB Financial Services, which offers personal gold and auto loans, and on back of that, clarification just came in. So there you go. So all of these counters were in focus on back of that news development, Vinny.
Let's move on, talk about TCS. Ashesha, starting the earnings season with the bank is going to be TCS. What is the expectation this time? Is it going to be a good one, a bad one? What are we expecting?
Well, yes, we are expecting muted set of numbers from major TCS, which will be kick-starting Q4 earnings season later today, where US revenue is expected, dollar revenue is expected to higher by about 1.3% on a sequential basis. Rupee revenue, meanwhile, is expected to see an uptick of 1.7% QOQ. Lower furloughs and full quarter ramp-up of BSNL deal is likely to aid revenue for the company this time sequentially. As far as margins are concerned, that is expected to inch higher. We are expecting margins at 25.2% versus 25% that the company had reported in the previous quarter. Better utilization and lower subcontracting costs is expected to lead to margin expansion this quarter on a sequential basis. Constant currency revenue growth is expected to come in at 1.2%. In terms of key monitorables, we have FY25 outlook. What is the management commentary with respect to demand, deal pipeline? So these are some of the key monitorables. But all in all, we are expecting a muted set of numbers from TCS this time.
Oh, TCS for you this evening definitely going to be very hectic, very heavy, given the fact that you have TCS earnings. Apart from that, you have IPCPI data as well that will come out today. So yes, it's going to be a busy evening, or busy Friday evening at least for us right here. But Amar, let's move on then and let's talk about Gujarat Fluoro. How is this one looking on the charts to you?
This stock has really taken off this week, because if you look at the weekly gains, the stock is up by almost 12%. If you look at the quarterly gains, the stock is up by around 50%. With the monthly gains, that's up by around 15%. So the stock this week has a significant positive for the stock, because the stock, if you look at, if you ask me on the long-term basis, it's not very positive. More or less consolidating. It's not negative also, not positive. More or less consolidation happening in that stock. But the good part is that over the last few trading sessions, what we are witnessing is that the average volumes and the average delivery quantity, that has been increasing. And also at the lower level, a lot of buying interest had come in, because somewhere around the 3,000 levels and 3,100 levels, that was where a lot of buying took place. And then the stock took off. So if I talk about yesterday, there was significant volumes again. And today also there's significant volumes. The stock on an upside has got resistance around the 3,800 levels, 3,800, 3,850. So the stock has the potential to rally towards those levels, because the way the stock has moved out of this consolidation zone, now it needs to sustain above the 3,400 level. So sustaining of the 3,400, 3,450 level, the stock has a potential to rally towards 3,800 to 3,850 levels. So the one can definitely keep a watch on this particular stock.
Okay, surely keeping an eye out on Gujarat Fluoro. Let's move on to the next one. Ashiana Housing, strong Q4 updates. the company has reported. When you're looking at it in terms of the area booked, that came in around 10.6 lakh square feet in Q4 FY24 versus some 8.59 lakh square feet in Q4 FY23, so a year ago. The value also in terms of area sold, that's also an increase, almost doubling versus last year, 862 crores, 435 crores. And in terms of overall, a strong performance that came in for FY24 from Ashiana Housing, and that is why it merits an up move of almost 13-14% that you're seeing in the stock even now. Strong move that we've seen intraday, record high levels that we saw in terms of the stock up move as well, still managing to hold on to those record levels.
Absolutely. All realty stocks, if you look at them, they've reported really healthy quarterly pre-sales numbers. Looks like a lot of people are buying new houses, no doubt, while you have so much of under construction property, isn't
Absolutely.
it? But Amar, coming to you, JB Chemicals, how is this one looking on the charts to you? Because this one is a candidate that has been loose of late.
Yeah, I would say that if you look at this stock was in for consolidation, because if I go back see towards the second week of February, the stock had made a high of 1940, and from those levels the stock corrected towards, I would say, 1500 odd levels, and again the stock is inching towards the 1900 levels. It's currently around 1800 odd levels. If you ask me from a long-term perspective, there's no doubt that the momentum is there for the stock. And I'm talking about long-term, primarily referring to the monthly and quarterly charts. Weekly charts, what we saw is that the stock corrected and is trying to bounce back. What we are seeing is the volumes have also been somewhat positive or above average over the last 20 to 30 trading sessions. So that is the positive aspect. And the other thing is that when the stock had corrected significantly on 29th of February, there also buying had coming in at the lower levels because the stock formed a bullish pattern around crucial support zone. So this is one stock one keep a watch out for, but one needs to remember very clearly that 1900, 1940, 50, that's a zone of resistance. So if one is buying, one has to remember those levels are going to be very crucial, where you could witness some selling or profiting opportunity. The stock has got good support coming out of the 1700 levels.
Okay, that is JB Chemicals. Keep an eye out on the levels, but let's move on and bring on board Ravi B. Goyal, founder and CMD at AGS Transact Technologies, to talk about the roadmap and growth for the company going forward, outlook in terms of digitalization, how that is going to be a disruptor. Thank you so much, Mr. Goyal, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And let's start by talking about the business model for the company in terms of how are you seeing the technology and digitalization actually being a disruptor.
Thank you so much. So as far as our business model is concerned, I mean, we are in the payment space. We are there in the cash payments. We are there in the digital payments. On cash payment side, we are mainly involved with the ATM on an outsourcing model where we deploy the ATMs on behalf of the banks and charge them on a monthly or on a transaction model. Second, on the cash side, we are doing a cash management operation where we take the cash from the bank vaults or the branches and fill the ATMs. And third is that this cash management is being done through our 100% subsidiary called Secure Value. On the digital side, which has been a very focus area for us, we are doing three main businesses at our subsidiary called India Transact Services Limited. First is deploying the point of sale machine, that is card machines, that is on the retailers, on the corporates, and for oil marketing companies, where we had done a very nice interface for connecting the fueling operations to the payments, and that has been a very successful. We have been the innovative in that. Second has been the issuance of prepaid cards. We have prepaid instrument license from RBI, and we are issuing the prepaid cards. This is being done for as an NCMC card as well as co-branded cards with corporates. And third is the app on a mobile, which we are doing it for one of the large OMC being run on as a pilot. So these are the main three businesses. We also have subsidiary in Singapore, which in turn has an operations in Sri Lanka, Indonesia, Cambodia, Philippines, and Singapore itself. So these are mainly our business operations, what we are doing.
After Mr. Goyal, this is Cheryl also joining in the conversation. There have been enabling announcements from the RBI pertaining to the KYC norms of NCMC, and also more recently around enabling UPI on cash deposit and linking with PPI on third-party apps. What does it mean for the industry and AGS, since you are both in cash as well as digital payments?
So these all the three notifications and the initiatives from RBI is going to be a revolutionary for the payment industry. The first being NCMC cards now can be issued without any KYC. Now this NCMC interface, which was developed by NPCI, has been there for some time, but the metros were finding it very difficult to issue it because of the KYC norms, and it used to take a lot of time. So we have seen that the metros have been issuing their own closed loop cards as well as the NCMC card, but the percentage of NCMC were almost around only 10%. Now with this NCMC without KYC, we would see that all the cards which would be issued through metros would be only NCMC. There will not be any obstacles on issuing the NCMC cards, and NCMC cards being interoperable can be used for metros, for water metros, can be used for parking, tolls, and buses has a much broader usage, and we see this as absolute going forward a very big initiative and a very good growth prospects for us. Second being UPI enabling the cash deposits on a cash recycling machines. This is also going to be revolutionary. We all know the way the UPI has been growing. Now there was an announcement earlier on the UPI for using the cash withdrawal on ATMs. That has been already in operations. With this new initiative, we will see that the cash deposit on the cash recycling machine also won't need any physical cards, and it can be done through your mobile. And third, the PPI can now link their wallets to the third-party apps. It's also going to be very revolutionary, because what we see, there is a definite need and definite usage of a prepaid cards, where because of the of digital transactions being done through UPI, the consumers don't want to expose their bank account, they don't want to expose their credit cards, and it would be definitely useful for them to minimize their risk, to control their risk. They would be able to now use the PPI, and whatever is the balance only at risk can be used for third-party apps, and would be again a very good growth for us.
Right. Also, just want to understand in terms of, if you could talk to us about the new initiatives that the company has taken, and other than that, your growth strategy in the next couple of years, how do we see the company moving?
So one of the, obviously the new initiative which would be an NCMC on a zero KYC. This would be absolutely a focus area. But recently we have been issuing the NCMC card along with RBL Bank, Bangalore Metro. We have already issued around 40,000 cards, and very soon our target is to reach to around 2.5 million cards. Bangalore Metro right now has already issued around 5 million cards, and over a period of time, I'm sure the consumers would be replacing all these cards with NCMC. So this is going to be one area. We have also announced a few tie-ups on the corporate side for a co-branded cards, and there also we are talking about around 3 million plus cards to be issued as an open loop prepaid card. Third, which is going to be, as I mentioned, about a fueling app, which we have tied up with one of the OMC. So there also the pilot is in the final stages, and once the final is successful, pilot is successful, we will be getting the rollout for on a pan-India basis.
So the ATM expansion clearly seems like a big trend. The company also won contracts to deploy ATM machines. If you could tell us what's the outlook for this particular segment, how big is that opportunity?
We have already announced that we have won two orders from State Bank of India. One was to supply around 1,350 machines, which would be done in this quarter. We have also won a contract for around 2,550 machines to be deployed on an outsourcing model in next 6 months' time. So these two have been a very big orders for us. We have been also getting some orders for our cash management business, which is dedicated cash vans from banks like UBI, Canara Bank. That has been doing very well.
Okay, Mr. Goyal, with that, thank you so much for joining in with us this afternoon on now, giving us an understanding in terms about the company, the growth of the company going forward, as well as what opportunities lie for the company. Thank you so much. That was the management of AGS Transact Technologies joining us to talk about the roadmap of the company going forward. But with that, just step into a very short break. Don't go anywhere. We'll be back with more stocks after the break.
If you like this video, then like, share and subscribe to ET Now.